Hi, everyone. Welcome back to another episode on the Indicott Invest channel. Today, we're going to talk about Q4 earnings for Pagaya. If you guys saw this morning, and appreciate the support if you did, I went live with Trevor Invests and Wealthmatica, or Nick and Trevor are the two I went live with this morning to talk about Pagaya's earnings. Not great, not bad. I think market overreacted for sure, and I was a net buyer, and so we're going to go ahead and look at the stock right now. Currently, it's 15.11 per share. At the low this morning, I mean, it was down 20, almost 27% at 1360. Now, in terms of buying, straight up, I bought in my private portfolio. I posted on Twitter. I think I bought 250 shares. I also bought in the public portfolio. As we sold HIMS, I moved most of that into Pagaya actually, and Nvidia, which we talked about a little bit on Saturday. But yeah, so Pagaya earnings now it's still down 20%. Now, why is it down 20%? Great question. Good question there, guys. But if we look here at I'll go ahead and pull up their Q4 highlights. So let's share this tab. So if we look at Q4, they did 335 million in revenue, 20% year-over-year growth, it says, and that is a miss. So they guided for 348 million in revenue, and so they missed on revenue. In EPS, they did 34 million, which I believe, well, that's not EPS. They did net income of 34 million, which came out to an EPS of 80 cents a share versus 77 cents a share at the guidance. And so they beat on EPS. Now, why? So they talked about a little bit in the call, and we'll go into a little bit of it more, but essentially it was purposeful. They're really coming in, and the tone that I really got from the call was they're being cautionary. I think the possible Fed Chair Warsh being appointed had not scared them, but in a sense, forced them to be cautionary moving forward. They also talked a lot about, and their tonality was more on, being profitable and consistent profitability moving forward. And a lot of sandbagging. You could kind of tell in the call that they didn't want to say it outright, like, "Hey guys, pay attention, we're sandbagging," but they essentially said the guidance they gave is, the only chance it doesn't hit their midline is if basically we go into a massive recession and the world collapses. It's basically the verbiage they gave on the call. And so I don't think we see, a miss on their guidance. But let's go ahead first before we talk about that more and just kind of dive into the numbers a little more, just so, if you guys haven't, you guys are working this morning, we can talk about it. So Q4 highlights, they did 2.7 billion of network volume, compared to the outlook of 2.65 to 2.9. So, they beat it a little bit, but missed quote unquote in the midline again. Revenue is 335 versus their outlook, and I think this is 348 would be the midpoint here. And they grew 20% year over year by 16% growth in revenue from fees. Now, their fee from less revenue from fee less production costs, which is essentially just their gross profit, was 131 million, outpacing network revenue as a percent of, and so FRLPC, say that 5 times fast, I can't, as a percentage of network volume, improved 40 bips year over year to 4.9%, which is awesome. Adjusted EBITDA of 98 million compared to the outlook of 99 to 109, grew 53% year over year. So basically, they missed their lowest point of guidance by 1 million. I'm sure, really, in this case, it's probably just a rounding error. Well ahead of revenue and FLRPC growth, demonstrating continued strong operating leverage. Their adjusted EBITDA margin rose more than 6 points to 29%. That's great. They had a record GAAP net income margin, or GAAP net income, attributable to Pagaya shareholders of 34 million, a 10% margin, which is awesome. I believe last quarter was 6 to 6.5% margin, so crushing it there. And they had 79 million of adjusted net income. So again, they go to and talk about more of the partnerships. So they talk about scaling our network with 3 new partners and multiple onboarding or multiple in the onboarding queue. So kind of in more detail, we have multiple additional partners getting onboarded at this time, which will go live over the next 2 quarters, including regional banks. These new partners represent each of the 3 asset classes in which we operate. Our strong pipeline solidifies Pagaya's unique value prop as lenders look for ways to grow their business and meet their customers where they are. So the CFO and president, or co-founder president, Sanjiv Das, gave an update on their operating business. And something I want to highlight here, and Nick kind of commented on, is their new partners. So our onboarding process is truly industrial grade now, minimizing partner resource requirements. We would note the following among our onboarding process enhancements. So they launched Pagaya API version 2, onboarding for all products up front, pre-built API integration for entire PGY product suite during onboarding. Awesome. All agreements with new partners are long-term agreements with volume, fee, and other commitments, along with other mutual protections. All of our new partners have committed to an 18-month joint roadmap to accelerate scaling across our product suite. So again, guys, like the real reason I like this business and the real stickiness, and you can say hello to the Rhoda, the dog in the back, is because of the partnerships and the fact that their partnerships really never. I mean, they never really leave them, right? So I think we haven't even seen a single partner they have leave their platform, and there's a reason for that, right? It shows the value of it, it shows the stickiness of it, right? And so here are more information on their partners, just in general. So these, along with the other ongoing enhancements, help to efficiently drive three recent new partner launches. So Achieve, GLS, so Global Lending Services, and a major buy now pay later provider in North America. While multiple additional partners, including banks, are currently being onboarded, these are expected to go live within the next few quarters. So on that, which I found really interesting, um, that they may name those three partners now because they also said in the earnings call themselves, they said over the next 2 quarters, they're going to have 7 to 8 more partners onboarded, which is guys. If you think about that, I think all of last year they got 7 partners. So if they do 7 partners in 2 quarters, in half the time, 6 months, I mean that shows to me crazy acceleration of their partnerships, and again just shows the network effects of having such a powerful platform that partners with all these big banks and big financial institutions. Um, Now that was on the earnings call as well that they hinted at that 7 to 8 partnerships. But again, overall, like they missed revenue, guys. Obviously, not a great look. It doesn't feel great as an investor to see your position down, 27% in a day at the low, and even now down 19%. It's not the best, but again, I think for me, I added here. I'm making a smaller position around 5% of my portfolio. So again, it's not a crazy position for me, but I do think there's some value there. And if we take a look as to what I mean, guys, and let me zoom in here so you can see what I'm talking about. And let me get rid of the past 6 months or something because you're only making the past 6 months or a year. Guys, they traded at a 0.92 price to sales. 0.92. They're under a 1 price to sales while making money, 10% net income margins. I mean, like, what are we talking about here? It's just insane to me. Obviously, if you look at when was this? This was September at the peak. They traded at a 3, which even then is like, okay, I still think that's slightly undervalued, but I can understand if they want to make it between 3 to 5 price to sales. But a 0.92, like, are we joking? It's insane to me. And if we take a look at I want to take a look at just more financials. So I put up quite a few financials here just to give you guys an update of where they are. And then let's do actually, yeah, let's make it Q4. So the total revenue again for the trailing 12 months is 1.3 billion, which is awesome. They hit their guidance of the full year for 2025. They're doing a gross profit of 552 million. So, which is great. That puts gross profit margins at around what 40%. Well, actually, I literally have it up for us. Good thing I tried to do the math there. At 42.4% is their gross profit margins. And this is their revenue change. So they grew, 8%, which is crazy. 27, 26%. That trailing 12 months. The growth. So let's go ahead and remove the revenue as we talked about it. Remove the revenue change. We look at their gross profit, like I said, 552 million with the 42% margin, and they did 71 million of net income for the trailing 12 months, which is awesome. And that's from a negative 445 million in last year, right? So like insane change year over year. It just shows the business is really hitting that operational leverage point, which we'll see moving forward. Now, actually, I want to take a look now that I'm kind of on this page and look at free cash flow. I don't know. I believe that would be a KPI probably. No, so this is also a lot of. I love Fiscal AI, by the way. I don't know if you guys use it. Um, but let's take a look at cash flow statement. Let's get free cash flow. Free cash flow. Here we go. Here's your free cash flow. And so again, I mean, look at that. The year-over-year free cash flow is just insane. They did 48 million last year. They did 225 million this year. I don't think they had a free cash flow guidance, but I mean, they're growing like crazy, and they're now at a point that's very respectable as a business. And I don't see them going anywhere. And that's sort of kind of what I got from this call is like, hey guys, you know, the goal here is to be a long-standing business. We're not trying to grow at all costs. And they said that multiple times. They said, we're not trying to grow at all costs. The goal here, and I'm going to pull up Wealth Matica's tweet because he got it from the earnings call. And so I think he's got a great point here. Also, if you guys don't follow him, you guys got to give this guy a follow. Um, And so please give Wealthmatica or Nick here a follow. Just post some great ED. You guys know Zeta. If you guys know Zeta, you know Nick. But he's also pretty big on Pagaya. But here's something he grabbed from an earnings call that I think is just super important to note on as a long-term investor here. So we are building a B2B2C platform that will be the cornerstone of the U.S. financial ecosystem that should be embedded within every U.S. consumer lender. So they're trying to be the platform in the financial ecosystem for consumer lending, right? And so for a company to be the platform, they need to be profitable. They need to stay as a company. They need to exist as a company and not try and you know a I think be super risky and try and grow at all costs. I think maybe they could, and that's possible. But the risk to reward and the trust you lose if you miss on earnings is not the same as coming in and saying, "Hey guys, we're kind of sandbagging here. We don't really, there's more macro concern, but we still want to, they still are guiding for 20% growth. They're still doing it profitably, and they hinted at that. They even literally said that unless there's a crazy terrible macro condition, they're going to hit their guidance and they're going to hit their $100 million in net income. And so they literally stated they will hit the $100 million minimum, and they said that multiple times on the call. Now, on the call, there were a couple things that I'm surprised weren't asked. So, I was assuming because if you guys know another financial company called SoFi, investors love to ask or SoFi themselves gives their guidance with an expectation on rate cuts. How many there are going to be. And so SoFi gave their guidance for the full year, expecting 2 rate cuts. And so as an investor, you can know that if there's more than 2 rate cuts, they're going to destroy earnings. If there's less, they might not beat earnings. And so the guy didn't give an estimate or a revenue guidance or any sort of guidance based on rate cuts. And I was kind of expecting, honestly, an analyst to go in and say, based on your guidance, how many rate cuts are you expecting? And no one asked, which was surprising to me. That was number one. The first thing I was honestly kind of surprised no one asked about. Um, and I was also a little surprised that I feel like a lot of the analysts really care about the loan structure, which I get, like ABS and the risk and at risk on the balance sheet. I get that, but none of them really asked about the partnerships as well. I usually you see with partnerships like, hey, could you touch on a little bit more about that buy now pay later client that you were talking? You kind of can see if you can pull it out of them as an analyst, right? It seems like the analysts don't really care about the partnerships as much, which is kind of interesting as an investor because that's really what I care about. I care about the interest, the partnerships, and I care about how the company looks at themselves long term. Um, yeah, guys. I mean, look, earnings was decent, wasn't great, wasn't bad, as you kind of can see in the title. Um, but I'm a holder. I'm actually a net buyer, honestly, at this point. I bought, like I said, 250 shares in my private portfolio. I bought again in the public portfolio. And so I'm a buyer. But again, it's still only a 5. Maybe it'll get to a 10% position if it somehow doubles, and I don't buy anything else. But it's not going to be some massive position for me. I think there's an undervalued play here. I think I like the found and lend business. I like the fact that they're sort of entrenched with a lot of financial institutions like SoFi, which I use, like Bank of America. And I think they'll kind of become that platform. And I like the B2B side. I think it reduces risk because it's not on the consumer front side. Um, but yeah, is what it is. Not all companies are going to crush their earnings and they're not going to go up shoot 20% the next day. Yeah, those are my thoughts on Pagaya. Just a quick update on the news today and related to Pagaya and its price action. I appreciate you guys' support. It was awesome. I think there was like almost 50 of you live this morning, which is, I really appreciate it. It's really fun to do this. Yeah, you guys will see me posting this week. I will be live for Nebius. Of course, I'll be live for Nebius earnings on Thursday. I'll do a recap video on Thursday as well, going over that earnings. But I appreciate you guys' support. I will talk to you guys on the next one. And yeah,